I wish the Republicans had cared more about government spending and not passed the big, beautiful bill. So this is all much ado over nothing. But again, it just doesn't instill a lot of confidence in government officials. And that should weaken the dollar. That should play well for gold, get more central banks to just want to get rid of dollars, get rid of treasuries, because it's only a matter of time before there's some kind of default on treasuries or massive inflation. But either way, the central banks know that they're going to get clobbered if they get caught holding the bag on a bunch of treasuries and U.S. dollars. And so they're moving into gold, and the public is now moving. I've been saying this. Wall Street is finally woken up. And for the first time in my career, I'm not the only one on Wall Street recommending gold and silver.
Peter Schiff from SchiffGold says silver might finally be ready to outshine gold. While gold continues its steady climb, silver remains deeply undervalued, not just relative to gold, but against the tidal wave of dollars already printed and the many more still to come. Schiff argues that gold's rise isn't about excitement or speculation, it's a signal. It's telling the truth that official inflation data refuses to admit. Prices aren't stabilizing, they're accelerating. There's still plenty of inflation baked into the system, and gold is simply reacting to it. According to Schiff, when inflation worsens, the rotation out of risk assets will accelerate. Investors who've been chasing crypto or inflated tech stocks will start moving into hard assets. Physical gold and silver, the same thing central banks have been quietly hoarding. Many of those banks are cutting back on U.S. Treasuries and dollars, a clear vote of no confidence in America's fiscal discipline. The ongoing government shutdown only makes that picture worse, highlighting a Washington completely unwilling to rein in spending. Schiff says the illusion of growth created by inflation, soaring GDP and record home prices, fools people into thinking they're richer. But in real terms, the value behind those numbers is falling. $1 million home today may buy less wealth than a $100,000 home did decades ago when measured in gold. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
But there's now so much money that wants to come into this market that the dips are shallow and they're over very quickly, which is why I've been telling all the SchiffGold customers, don't even bother waiting. I mean, yeah, if you waited for a dip, you could have got lucky and got one on Yom Kippur, but it didn't last long. It was a short sale, and it still didn't even get back down to where you could have bought it the week before. You know, it just crashed down to 46, right? The low 46s. And now we're back above 48. But, you know, there should be some resistance at 50, I would imagine, because we have this huge double top at 50. But who knows? I mean, I wouldn't be surprised if we blow through 50. But I do think that once silver gets above 50 and holds above 50, Katie barred the door. It's going to be a big rally. And gold's going to rally too, right? It's not like gold's not going to rally when silver's rallying. It's going to rally. I just think silver is probably going to rally more. That's why I've been, really trying to push people to get some silver, especially if they haven't had any, because I still think it's very cheap in relation to gold, which is also cheap in relation to all the dollars that we've printed. But not just all the dollars that we've printed, but all the dollars that we're going to print. That is the key. Gold is telling you that there's a lot of inflation in the pipeline, right? The Fed wants you to believe that inflation is going back down to 2%. Donald Trump wants you to believe that he's already, kicked inflation's ass and it's gone. No. Gold is telling you that inflation is not only here to stay, but it's going to get a lot worse. And as more people recognize how much worse it's going to get, they're going to be buying gold and silver. And they're not going to be buying these cryptos. I mean, they're buying them now, but ultimately they're not going to be buying them. All that, the real money that thinks you've got a inflation hedge in Bitcoin is going to realize that if they really want an inflation hedge, they got to buy actual gold, actual silver. Right now, I still think it's more central banks. And this government shutdown, by the way, we're in day 3 of the government shutdown. And this doesn't play well on the world stage to see the U.S. government shut down and, operations not happening. It gets people to lose confidence. I mean, not that they haven't already lost confidence in our credibility when it comes to managing our fiscal affairs. They know that the deficits are going to rise in perpetuity, that even the Republicans aren't capable of cutting government spending. I mean, yes, we're arguing over some Medicare spending or Obamacare spending. I wish the Republicans had cared more about government spending and not passed the big, beautiful bill. So this is all much ado over nothing. But again, it just doesn't instill a lot of confidence in government officials, and that should weaken the dollar. That should play well for gold, get more central banks to just want to get rid of dollars, get rid of treasuries, because it's only a matter of time before there's some kind of default on treasuries or massive inflation. But either way, the central banks know that they're going to get clobbered if they get caught holding the bag on a bunch of treasuries and U.S. dollars. And so they're moving into gold. And the public is now moving. I've been saying this. Wall Street is finally woken up. And for the first time in my career, I'm not the only one on Wall Street recommending gold and silver. And the fact that now we're seeing money flowing into the miners is a vote of confidence that gold prices aren't coming down. I mean, the reason that Wall Street was reluctant to embrace the miners is because they always expected the gold price to go down. They never understood why it was going up, so they assumed it was just going to come down. But they've now come to the conclusion, after gold has gone up for so many years, that it's not going to go down, that it's going up for a reason. And the reasons it's going up are not going away. In fact, the reasons are going to get stronger. So the rally is going to get stronger. You know, when they talk about the stock market, right, because the Dow Jones hit a record high today, closed above 47,000. And that's what Americans are going to hear, the big headline, the Dow's at 47,000. We're rich, right? I mean, because people remember in the year 2000, the Dow was 10,000. Now it's almost 5 times that. Hey, the Dow is up. But in terms of real money, gold, it's down. Right? On the quarter, the Dow Jones is down 10% priced in gold. It's not up. It's down 10% if you price it in gold. If you go for the year to date, 2025, the first 3 quarters, the Dow is down 27%. It's in a full-fledged bear market. That's a horrible return. Negative 27%. It's positive in dollars, right? Because gold is up 40-something percent on the year, right? But the Dow is down in terms of gold. Over the past 2 years, because gold has doubled from the end of Q3 2023 till the end of Q3 2025, which was a few days ago, the price of gold more than doubled, just barely more than doubled. Yes, the Dow Jones went up a lot over those 2 years, but it didn't double. So in terms of gold, the Dow Jones lost a third of its value. A third of its value. Now, gold is money. The government lies, right? Gold doesn't change. It is consistent. It's the purchasing power of fiat money that doesn't just change, it evaporates. And one of the reasons that the governments love to create inflation, other than the fact that they benefit from it because they spend the money they're printing, but it also creates the illusion. People think times are good because the numbers get bigger. The GDP goes up, right? Oh, I'm living in $1 million house. Right, but that $1 million house may be less valuable than the $100,000 house you used to live in, because you actually can buy that house today with less gold than you bought it back then when it was only $100,000, right? So the houses aren't really getting more expensive, right? It's the dollars that are getting less valuable. But if you price your house in gold, you can see what's happening, and you got to price the stock market in gold. And I think this bear market is going to continue. Stocks will continue to go up in fiat currency, but they will continue to go down in real money. That's why you got to own real money. You don't have to buy the Dow just hold gold and you're doing better than the Dow. You're not getting enough dividends on your stocks to make up for what you're losing in real depreciation. So the best hedge is to own real money and just hang on to it. And I think that's going to continue. Remember, we're down 70% in the last 25 years. We could be down another 70% in the next 5 years. And it's not going to be because the Dow goes down a lot, although it might, but it's more going to be because gold goes up. And that's how the Dow is going down. It's going down in terms of real money, not fiat currency.
Peter Schiff says gold looks ready to blast through $4,000 an ounce, just $100 away, and silver is closing in on $50, a level it hasn't seen in over a decade. Silver is less than $2 shy, and if momentum holds, it could happen any day. Schiff points out that anyone who waited until Monday to buy already missed a big move. Gold jumped $70 and silver more than $1 before U.S. markets even opened. Even with these explosive gains, Schiff notes there's been surprisingly little hype. Investors are taking profits, not chasing prices, an encouraging sign that this rally still has a long way to run. The lack of euphoria suggests we're in the early stages of a larger bull market, not near the end of one. Earlier in the week, both metals saw quick pullbacks, but the dip didn't stick. Silver finished strong, and several gold mining stocks that were down 4 to 5% during the sell-off ended the day near positive territory. Schiff says that kind of strength and resilience, where buyers quickly step in and reverse weakness, signals deep demand. To him, the setup is clear: gold and silver are breaking out, and the real mania phase hasn't even begun. Let's get back to the interview.
Silver hit a new 14-year high. We actually closed above 48 on the week. Intraday high today was above 48.30. So silver was up 4% on the week. And that includes a big sell-off. We had a $2 an ounce sell-off intraday yesterday on Yom Kippur. And I think a lot of that happened with low volume because silver rallied early in the morning up above 48 and then immediately got hammered down to 46, $2 drop in a matter of a few hours. Obviously, they were running stops. What the stops are is when futures traders, they try to trade, they're all levered up, and they put sell orders in below the market because if the momentum turns, they want to cut their losses. Well, I think in the thin trading with a lot of Jewish people not at work, they were able to take advantage of that and flush a lot of speculators out. That also hit the mining stocks, created a great buying opportunity, I think, in the mining stocks, which also on the week, the GDX was up 3.2% and the GDXJ up 3.7%, but not nearly as much as you would have thought given the big moves in gold and silver. And I think a lot of that had to do with the shakeout from Thursday. And I think some people were a little shy today to even buy these stocks, which I think is setting them up for another big rally. In fact, I think that we can move above 4,000 in gold next week because it's only like $110 away. I mean, that's nothing. And silver is less than $2 away from 50. And this may be the last weekend that you can buy silver below 50. We'll see. I mean, I've been telling everybody on the Friday market wrap not to wait till Monday. Buy over the weekend. And if you would have followed my advice last week, and if you bought on Friday night, if you bought any time on Saturday, if you bought any time on Sunday morning, Sunday afternoon, you got basically unchanged. But if you waited till Sunday night or Monday morning, gold was up $70, I think, on the Monday. Silver was up all over $1. We had a big move. Most of the move happened. But then, we continue to build on that. But I think the same thing is probably going to happen again. I mean, there's no guarantee. But I think a lot of buyers come out on Sunday. A lot of foreign buying. Maybe the central banks, they start the week and they buy some gold. So I would expect another big move. And I would just buy. Again, hopefully you bought last weekend or the weekend before, right? As I've been telling you. Sales have been picking up at SchiffGold. They're about double what they had been, but, they're still not anywhere near where they should be, given what's happening. Now, I think one of the reasons that we had a muted reaction, I think, in the mining stocks this week was we finally had a big rally in cryptocurrencies. Bitcoin was up about 12%. We almost hit a new high in Bitcoin. In fact, the Bitcoin ETFs, the exchange-traded ETFs, hit new highs. But Bitcoin itself didn't, because when it hit its high of just below 125,000, those exchanges were not trading. But we came close, not quite there, but maybe we'll get up there. As I'm recording this, Bitcoin is 122,600. So it's pulled off a bit from its intraday high. But I think maybe some people sold some mining stocks and maybe, went into Bitcoin stocks. I think that's going to be a mistake. In fact, I think the fact that you have so much profit taking in gold stocks this week, despite the record highs, right? Record high price of gold, 14-year high in silver. And rather than rushing in and buying stocks, you had a lot of people cashing out and saying, well, let me take my chips off the table, let me sell. That is very healthy for a bull market, to have profit taking, to not see a lot of speculators rushing in to buy the highs, but people are being cautious. They're paring back their positions. They're not rushing in to buy. All that is a sign that these are early days in this bull market. We still have a long way to go. But, the sell-off that we had all basically took place on one day. And even though silver was way down, it recovered. It was still negative on the day. And some of the gold stocks that were down 3 or 4 or 5% ended up positive on Thursday. Now, most of them finished negative, but way, way off the lows.
What's taking shape now feels less like a short-term rally and more like the early stages of a reckoning. The market's quiet strength says more than headlines ever could. Investors are beginning to grasp that printed money and inflated valuations can't substitute for real value forever. Each jump in gold and silver isn't just about price. It's about faith draining from paper wealth into assets that hold weight outside the financial system. The pullbacks are brief because the demand isn't driven by hype. It's survival instinct in a distorted economy. If these moves continue, we may soon see a reset in how the world defines stability, wealth, and trust in its currencies. Will investors recognize this shift for what it is, a fundamental repricing of reality, or keep treating precious metals as a trade while the foundation beneath paper money quietly gives way? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.